Madam Secretary, good to see you.
Thank you.
I want to give you the state of play of safe banking, which is the cannabis and banking. And you and I have had many conversations about this, but I want you to understand where it is and to put the muscle of the administration behind getting it passed. So we've passed it now out of the House 6 times. Most recently, it was amended onto the America Competes Act. The way we've passed it has been with sizable bipartisan majorities. When it was a standalone, we passed it 321 to 101. But it seems to get.
They got somebody else above me, so I might be next, but I got 4 minutes.
Hey, Al, you need to mute.
I think he's going to suggest maybe doing something like a buffet.
So gets to the Senate and gets stuck. And when Senator Crapo chaired the committee, basically from the Republicans' point of view, too big, too broad. Now Senator Brown is the chair of the committee, too limited, too narrow. But we know that people are still getting killed and robbed. And most recently, Seattle Times did an editorial last week because 3 people were killed in Seattle last week. A robber, a police officer, and an owner of a dispensary because of all the cash. Oakland, California, in November, there were 25 armed robberies in 1 week. And we had a young woman speak with us who was one of those who was robbed. And then she got robbed again last week. Small businesses, minority-owned businesses need access to capital, which they would get if the banking system were open to them. So I was speaking to the national bank supervisors last week, and I said to them, this isn't Ukraine. This issue isn't Ukraine. This issue isn't nuclear winter. This issue isn't climate change, but it's a real problem. And they said, yeah, you're sent there to solve problems, and they expect this problem to be solved. I'd like to just get your sentiment on this subject, since you and I have talked about it for a very long time.
We have talked about it for a very long time, and I agree with you. It's an important issue, and it's extremely frustrating one that we haven't been able to resolve it. I really appreciate your leadership in this area. We have worked with you on this bill. We're supportive of it. As you know, there's a conflict between state and national law. Banks are trapped in the middle of that, and some legislative solution, I think, is necessary to move this forward. I share your frustration that we haven't been able to make progress. I think it does really require congressional action.
And I thank you for that. And I guess I just ask you to impress upon the administration the need to either get it passed as part of the American Competes Act, which I think will be coming up the quickest, so that nobody else dies because there's so much cash, or standalone, but get it out of the Senate and get it to the president. So
we would like to see that happen.
Thank you very much. I will switch to Ukraine now for a second. One of the things that we've seen, President Biden's brought together all sorts of nations to deal with sanctions on Russia and in response to the invasion. But however, Russia's been preparing for this moment for some time, and Putin has been attempting to sanction-proof his economy. What should we make of the Russian ruble's recovery from the free fall it saw in early March? And is this a sign that the Russian economy is more resilient than we originally thought?
The Russian economy is really reeling from the sanctions that we put in place. And the market in rubles is not a free market where the value that's established in trading reflects the value the currency would have if it could be freely traded. Russians aren't allowed to sell assets. Foreigners who own Russian assets are not allowed to sell rubles and take their money from the country. there are capital controls in place, and the restrictions that that Russia and the Russian Central Bank have put on Russians leads to a situation in which you shouldn't really infer anything from the value of the currency.
Thank you for your service, and my time has expired.
Thank you very much. The gentleman from Georgia, Mr. Laudermilk, is now recognized for 5 minutes.
Thank you, Madam Chair. Thank you, Madam Secretary, for being here today. I want to shift gears a little bit and talk about the implementation of the anti-money laundering and beneficial ownership reform law that I know that you're working on right now. And the new rules from FinCEN really will require regular reporting of beneficial ownership from about 30 million businesses, along with about 2 million new businesses per year. Now, the vast majority of these businesses, excuse me, are law-abiding, and their focus is on serving their customers, making payroll. They're law-abiding businesses, but they don't stay tuned in to what's going on here on Capitol Hill. They're not watching the C-SPAN coverage of this today. They're just there trying to make a living. And so I see that it's going to be a real challenge to make sure they're aware of these new rules. Now, we don't want this to become a gotcha enforcement mechanism that's used by, unfortunately, too many agencies now as punishment for someone who just isn't aware that they have to give up this type of information. And quite frankly, most of them are small businesses. So my question is, what's your plan to work with state governments to make sure that small businesses are aware of the requirements and so they'll know how they have to comply?
Well, I think you raised an important point, that it is important to be in touch with these businesses. I can't tell you in detail what the plan is, but I'd be glad to have people at Treasury discuss this with you and offer a briefing and have a chance to hear your concerns and suggestions.
Well, I think it's going to be imperative for us to have a plan going in because, as I said, it should not turn into a gotcha enforcement mechanism to where a guy that runs a small carpentry shop who is more focused on the price he's paying for lumber and sheetrock, et cetera, he's trying to keep his businesses going, all of a sudden gets a knock on the door from a federal agent that says, "You've never told us who you are and your ownership." I don't believe that is, I hope that isn't the direction that we're going, but I don't know. I think there needs to be a plan going forward and that Congress is aware of the plan of how we are going to let these businesses know of the requirements that have been put on them by Congress and by the federal government to comply with this new law. And so I think there definitely should be a plan moving forward because this is, most of these businesses, they don't have floors of compliance lawyers. They don't even have a lawyer, they're just trying to get by. So I also think that there's a concern with many of us that the proposed rules definitions of substantial control and ownership interests are overly complicated. I think this is, it's going to make it hard to apply them consistently across the board, especially with various size businesses. And it's going to compound the problem for banks and credit unions if FinCEN uses those same definitions in an updated customer due diligence rule. So as a follow-on question, will Treasury and FinCEN take steps to try to simplify these aspects of the rule before it's finalized?
So, FinCEN has put out a proposed rule to collect the information, and it does wish to minimize the burden on entities that are required to report it. So there have been very significant public comments on the rule, and FinCEN will consider them very carefully, before trying to finalize a rule in this area. So this is a very legitimate concern, and one that FinCEN needs to carefully work on.
And if I'm not mistaken, FinCEN is technically a part of the Department of Treasury, is that correct?
Yes.
Of which you are at the captain of the helm. So I mean, it sounds a little bit like you're deferring them to be an independent agency over here, but they do answer to you, is that correct?
That's correct. It's
And
part of
so
Treasury.
what I'm asking is, are you going to give direction in these areas to simplify substantial control and ownership interest, or make it such that this doesn't turn into an issue where we find potentially millions of businesses not in compliance with the law and wondering where they're going to go? I mean, I'm looking for some type of direction. I'm not hearing there's a plan, and I'm not hearing that this is the way we're going, just kind of hoping that's the way we go.
Well, I agree that this is a very legitimate concern that needs to be addressed, and we will address it.
All right, thank you.
Gentleman's time has expired. The gentleman from Florida, Mr. Lawson, is now recognized for 5 minutes.
Thank you, Madam Chair, and thanks for having this hearing. Secretary Yellen, I'm hearing from some small CDFIs that they are concerned that proposed changes being made by the CFDI fund will make it harder to become certified as a CDFI and access the important capital that Congress has been providing. This is especially troubling coming out of a pandemic. Can I get a commitment from you today that we will look into this and make sure that the administration and the CFDI's funds will not make changes to the certification process for community institutions to become CDFIs more difficult?
So we'd be happy to discuss this in greater detail with you. I'm not sure I exactly understand what the issue is, but I can have my staff contact you and learn more. We're certainly very supportive of CDFIs and want to make sure that they can become established and receive all of the additional funding that Congress has made available. These are critical institutions in supporting the provision of capital, especially in low-income minority neighborhoods.
Okay, thank you, and I look forward to receiving that information. Secretary Yellen, I'm hearing from those representing credit unions that when they apply for CDFIs funds, some are waiting over 6 months for a status update on decision on their certification as a CDI. Can you look into it, what may be causing the delay in getting timely updates and decision, and let us know if this is something that needs statutory relief from Congress, or are there other ways that this can be addressed?
We'll be glad to work with you on that and have a look.
Okay. Secretary Yellen, with the creation of the interagency law enforcement team, how is it the information that treasurers collect being shared with the task force, and have you found the creation of the task force useful?
I'm sorry, the task force on what? I didn't quite catch that.
I'm saying, have you found the task force being useful?
Which task force?
Kept to capture, well, I'll tell you what, I said with the creation of the intelligence law enforcement team.
I'm sorry, are you referring to Klepto Task Force?
Yeah, have you found that information to be useful?
I'm not sure.
The klepto capture task force. Is that it?
Yes.
This was just recently established by the Department of Justice to help us go after oligarchs, to make sure that we're able to identify and seize their property. And I think they've already had notable success in seizing some property, and it's going to be an important initiative in helping us make sure that sanctions work.
Okay. With that, Madam Chair, I yield back.
Thank you very much. The gentleman from West Virginia, Mr. Mooney, is now recognized for 5 minutes.
Thank you, Madam Chair. Secretary Yellen, a recent study on Chinese lending by Aid Data revealed that China has established itself as the lender of first resort for many low-income and middle-income countries. China's lending terms are often less generous than those of Western and multilateral creditors, yet the multilateral development banks are not appealing enough to these countries, and they in turn turn to loans from China. China has financed hundreds of billions of dollars in development projects around the world in the last 20 years. China is not extending their funds to these countries out of kindness. They are using their financing to aggressively expand their influence around the world. So my question is, why is it that so many countries take a Chinese loan when financing from multilateral development banks is available, and what are you doing to change this?
So my sense is that many developing countries would much prefer high standards, capacity building, MDB loans to Chinese loans. And it's not that they prefer Chinese borrowing to MDB borrowing, but that they really want to have access to all the financing that's available to them, and they use both. We feel very strongly, and this is part of the commitment of the president made to B3W, Build Back Better World, to helping developing countries build infrastructure in ways that involve sustainable debt, transparency, high-quality lending practices, rather than Chinese, often predatory lending practices. And I think, to make sure that we have that capacity, we need to bolster U.S. leadership in the multilateral system, and to make sure that we meet our financial obligations to these institutions. So they need to be adequately resourced, and we don't yet have confirmed executive directors, which is also important.
Okay, thank you for your response to that question. As a lead into my second question, I'd like to use our current situation with Russia as a good example of why China's influence abroad is an important issue, very important issue. In response to its aggression in the Ukraine, America responded with sanctions that will isolate and weaken Russia. Such a response does not work if we act alone. We need other countries to join our effort in order to apply more pressure to Vladimir Putin and Russia. So my concern is that with China's growing influence abroad, it would be more difficult to isolate and weaken them in the case of a Chinese military aggression. So Secretary Yellen, how concerned are you that China's lending around the world could interrupt attempts to respond to Chinese aggression?
Well, I mean, I would say generally I am concerned about Chinese lending around the world. I think, as I mentioned, I think often Chinese lending can be predatory and result in unsustainable debt and influence on countries, and that I would very much like to see the United States and its partners expand our lending in ways that diminished China's influence in this space. And of course, it is a way in which China exerts influence on many countries that borrow from it. But we need an alternative, and we need to finance it, and need a response.
Thank you. I think in my last minute, I have time for one more question. The Chinese Communist Party is carrying out what is widely acknowledged as genocide of the Uyghurs, and yet only one member of the Politburo has been sanctioned pursuant to the Global Magnitsky Act, and that individual was sanctioned during the Trump administration. Why aren't we sanctioning China's top leadership for what they're doing to the Uyghurs?
Well, we have put on sanctions of individuals who are involved in Xinjiang and the Uyghur situation. Who exactly to sanction in China is something that's part of broader foreign policy concerns that State Department plays an important role in determining, is not just a matter for Treasury.
Thank you. I'd just like to close by saying we need to act quickly to stop China's negative influence from growing further. Thank you. I yield back.
Thank you. The gentleman from New Jersey, Mr. Gottheimer, who is also the Vice Chair of the Subcommittee on National Security, International Development, and Monetary Policy, is now recognized for 5 minutes.
Thank you, Madam Chairwoman, and thank you, Madam Secretary, for joining us today. The U.S. faces an increasingly complex series of challenges before it. Between the Russian invasion of Ukraine, competition with China, and the continued threat of both homegrown and domestic terrorism, it is critical that Congress work together in a bipartisan manner to address these issues. The world is watching our response to these critical issues before us, and it is imperative we act together to demonstrate leadership in such areas as stopping the financing of terrorists and ensuring the U.S. emerges as a leader in emerging technologies. Secretary Yellen, the New Jersey Office of Homeland Security and Preparedness just released its 2022 terrorism threat assessment. The report cited homegrown violent extremists, such as those inspired by ISIS and other extremists, as the top terrorist threat facing New Jersey citizens. What is the Treasury Department doing to combat the financing of domestic terrorists, whether the funding comes from overseas or from U.S. sources? And is this a major concern for you and your work?
Yes, it certainly is a major concern, and we're using sanctions policy and other resources to try to address this threat.
Can you speak a little bit about, if you would, where you see gaps now that you've been in the job for a bit, where you see gaps in your authority, which we could help address here in Congress? What would be most helpful for you to help fight these threats to our country?
So, generally, we have great powers to impose sanctions and to use them under president's executive orders to address threats that we see. There may be some discrete areas. I think one came up earlier in this hearing about geographical targeting in the case of FinCEN's collection abilities, but we can work with you and give you greater detail on areas where it might be possible to have our authority bolstered, but in general, we have substantial powers in these areas.
Thank you, and I look forward to working with you on that. If I can move on, I've been a strong supporter of establishing appropriate guardrails around the cryptocurrency space that will both protect consumers and encourage innovation here in the United States. This includes my discussion draft, the Stablecoin Innovation and Protection Act, which would establish guidelines on issuing qualified stablecoins. One area I'm particularly concerned about is ensuring that bad actors are not able to use cryptocurrency of any kind to launder money or fund nefarious activities. Can you talk a little bit about efforts Treasury is taking to ensure actors like terrorists or Russian oligarchs are to prevent them from using crypto and avoid sanctions regimes?
Yes.
I know you talked about this a little. If you can expand on that, I'd be grateful. Thank you.
Sure. I mean, we are aware of the possibility clearly that crypto could be used as a tool to evade sanctions, and we're carefully monitoring to make sure that that doesn't occur. But I would say we have a good deal of authority in this area and are using it and will use it. And it's harder on a large scale for an economy to actually use crypto to evade sanctions. Large-scale transactions would become apparent by those who regularly examine the blockchain. We would see that there were large transactions taking place. Exchanges, those who use crypto need to get in and out of it to buy things in hard currencies, and exchanges are subject to AML, CFT regulations, so they're part of the financial system that is subject to those regulations. And trying to use crypto on a large scale simply, we think, is something that is not easy to do. So it is a channel we're worried about. We haven't seen significant evasion through crypto so far, but we'll monitor carefully and use our authorities that we do have to make sure that this isn't a major avenue for evasion.
On the crypto space, you might imagine I'm hearing from, like many members of Congress, from those in the space, both consumer groups, but also, of course, entrepreneurs and businesses that are developing in cryptocurrency. I guess I'm out of time. I will yield back.
Thank you.
Thank you.
The gentleman from Ohio, Mr. Davidson, is now recognized for 5 minutes.
Thank you, Madam Chairwoman. And Madam Secretary, thank you. Appreciate your testimony today. And I'm just curious, do you believe that pursuing globalization through executive policies are aligned with our goals of promoting an internationally competitive environment through domestic policy?
I'm sorry, promoting globalization?
Globalization.
Through what?
Well, I mean, did we sign a treaty or something with Basel? Is there some sort of U.S. Did I miss something that the Senate, affirmed a U.S. treaty with some of this international global framework? And the reason I ask, just one of the most recent examples is this global minimum tax imposed under OECD Pillar 2, and it says it would protect national sovereignty. Your rationale seems perplexing, because I'm not sure anyone would think that sovereignty is derived from some sort of international agreement, particularly on tax policy. And of course, in our Constitution, it says all bills for raising revenue shall originate in the House of Representatives. And so, what's the logic of submitting to some non-sovereign international framework on tax policy?
Any change in tax law in the United States must be legislated by Congress without question. So there is no agreement that imposes any requirements on
So
the
it's just a
US
coordination,
Congress.
kind of like Basel isn't binding, but we do implement it and kind of gold plate it, for example. Not to conflate Basel with tax policy, but when you talk about bank regulation, prudential regulation, some of the components that are allegedly in these stress tests that even Congress isn't allowed access to, and the people submitting to them aren't allowed to, share the results of those, even to Congress, who wants to determine whether we have the right regulatory framework in there. A lot of this is coming out of this global cooperation. So what's the nature of that?
Well, look, we have a global financial system, and for it to be regulated effectively, regulatory systems across countries need to be coordinated with one another. And supervisors are all asking themselves, what's the best way to proceed to have a safe, sound
I think my point is that it is not a binding treaty of the United States, and it's not a power that Congress delegated that we shouldn't be able to hear candid answers. And so there are big black holes in terms of what we're able to get from this. And I just want to follow up on one area in particular, because I think you're saying something that's encouraging here. So in December, you submitted answers to Senator Toomey in response to questions that he submitted for the record. One question pertained to draft guidance issued by the Financial Action Task Force. A particular question asked if Treasury believed in non-custodial services should be subjected to money service business registration in light of FATF guidance that was issued in the fall. In your answer, you stated that the FATF guidance was aligned with prior FinCEN guidance, and that neither approach proposed to regulate the technology itself. Rather, you asserted that both FATF and FinCEN guidance were focused on financial activity. Do you still stand by that statement?
I believe so. I don't know if you have something particular in mind that goes against that, but
well, I don't. I think that my concern is picking up on that FinCEN guidance. For example, we introduced a bill called "Keep Your Coins," which protects self-custody, and the reason we feel the need to protect it is because Treasury under Secretary Mnuchin and at points under your leadership have proposed to enter into rulemaking on that would potentially prohibit self-custody, or as the language has been used, self-hosted wallets. But it's really self-custody of private property without an intermediary. And I guess I wonder, I was really encouraged by your dialogue with Mr. Gottheimer there in terms of your view on some of the digital asset space. And I know that you have a speech coming up on that, I think tomorrow. But in light of the President's executive order, do you believe that it would be fitting for Treasury or other components of Treasury, such as the SEC, to enter into rulemaking while we're in the midst of that executive order.
To enter into a rulemaking?
Rulemaking, speeches, statements of policy or guidance. Should we take those kinds of things as guidance or what, in light of the executive order?
So the president has issued an executive order asking his government to examine issues connected with digital assets. I'm giving a speech tomorrow to describe the executive order and the approach that we're taking, but you know, in most areas, we haven't come out yet with recommendations. An exception to that is in the area of stable coins, where I believe my undersecretary testified to you, the president's working group is sufficiently concerned about rapid growth that we did come out with recommendations there.
Thank you, and I hope Congress will participate fully, and my time's expired, I yield.
The gentleman from Illinois, Mr. Caston, who is also the vice chair of the subcommittee on investor protection, entrepreneurship, and capital markets, is now recognized for 5 minutes.
Thank you, Madam Chair, and thank you, Secretary Yellen. I'd like to understand a little bit about the energy sanctions that we have on Russia and the potential sanctions that we could impose. And I'm delighted to see that there seems to be some strong bipartisan support for sanctioning Russia's oil exports. If I'm doing my math right, Russia exported about 4.7 million barrels a day last year. They're about the second largest producer, 11 million barrels per day of production, and somewhere between 4 and 5.
I believe they produce about 10 or 11 million barrels a day.
Total production, but the exports are between 4 and 5. So
something like that.
That
yes.
ballpark. So, you know, we are, of course, a very small take of that import. So what I'd like to understand is that as we're thinking with our NATO allies and others about sanctioning of that, let's call it 5, how much realistically can we block from the sale in international markets? Can we get the whole 5? Can we get half of that? Like, what do we think is the amount of pain we could impose on Russia by blocking those exports?
Well, I mean, the United States has banned oil imports.
Sure, but we're like 500,000 barrels a day. Like,
I mean, the issue with blocking oil exports from Russia is that many countries, especially in Europe, are very dependent on that oil, and we're likely to see skyrocketing prices if we did put a complete ban on oil. And as I said at the outset, our concern has been in designing sanctions. We want to impose the maximum pain we can on Russia, but also taking care not to impose undue pain on Americans or on our partners. So we all realize we wish we were a lot less dependent.
No, and I'm sympathetic to that, and I'm not trying to ask a politically leading question. I'm just trying to understand. You know, we do have, and I realize natural gas is a bit of a different issue with Germany's situation, but with respect to oil, I mean, I've seen ranges of 1 to 3 million barrels a day that the civilized world could block, and I'm trying to understand because there's a big supply-demand balance question on the other side, and I'm wondering, as we think both about the tools we have to block Russia and the global inflationary measures, I don't know how to think about that except in saying how many million barrels a day are we going to take off the market?
So to the extent that we diminish Russia's ability to export oil and force Russia to keep oil in the ground, which is occurring to a meaningful extent right now, we do want to worry about overall supplies and making sure that they're at least roughly adequate. I mean, that's why President Biden announced a major release of 1 million barrels a day of crude from the Strategic Petroleum Reserve over the next 6 months, in the hope that an expectation that high prices will induce firms in the United States and elsewhere. It's enough time to ramp up production. If we're successful with that, it might be possible to put tougher restrictions on Russia.
Okay, well, maybe we can follow up offline, because I don't, the concern I have is that if we're looking at 1 to 3 million barrels a day of shutdown, there's no country that has the ability to ramp that up. And of course, the Strategic Petroleum Reserve is a finite resource. And I think we have a lot of things we could do on the demand side, of course, right? You know, I mean, I'm delighted to see the move on heat pumps and things we could do to lower oil use. But I'm nervous about what's there. And I would like us to understand, if we, on a bipartisan basis, as we should be, are committed to reducing Russian oil exports, then we need to have a really good visibility on what that does to global prices for oil markets, and to what degree can we reduce our dependency on those through other measures.
Right. Well, the demand for oil is highly inelastic in the short run, and so
As is the supply.
too large a restriction on supply could have very large price effects, and that's what we're trying to balance. That we would ideally like to impose as much pain as possible on Russia, but we need to take account of the consequences.
I'm out of time, but I'll send you a question for the record. I've really got the same question about food, that if I look at wheat production and corn production and sunflower oil production, there's the same dynamics there, and I'd like us to understand how we hurt Russia and understand the
Gentleman's
implications.
time has
Thank you. I
expired.
yield back.
The gentleman from North Carolina, Mr. Budd, is now recognized for 5 minutes.
Thank the chair, and thank you, Madam Secretary, for being here today. So considering that one of the topics of discussion today is our effort to counter terrorist financing, I'd like to discuss the fact that the U.S. government has already sent taxpayer money to convicted terrorists. So I sent you a letter on January 11th regarding the revelation that the convicted Boston Marathon bomber had received a $1,400 economic impact payment under President Biden's American Rescue Plan. Now, this was revealed in court filings in the state of Massachusetts. So for background, this is a man who planted a bomb at the 2013 Boston Marathon that killed 3 people, including an 8-year-old boy, and he maimed dozens more, and he then went on to murder an MIT police officer. So now, as of July 2021, the IRS found that 560,000 incarcerated individuals received stimulus checks, and that totaled $783 million. So, Madam Secretary, my first question is this. Can you provide an updated number on how many incarcerated individuals received stimulus checks from President Biden's American Rescue Plan?
Sorry, I don't have that number at my fingertips. I believe that the law required it. This wasn't a matter of IRS discretion. I believe the IRS followed the law.
Thank you. I want to shift gears just a minute. So can you, rather than how many individuals, can you now provide an updated amount of federal tax dollars that were sent to federal prisoners?
I don't have that. I don't have that for you, but this wasn't a discretionary decision by the IRS.
So from what we know, at least $783 million in taxpayer funds have been sent to federal prisoners. And that includes murderers, rapists, and terrorists. So, Madam Secretary, does the Biden administration believe it's acceptable that hundreds of millions of dollars, $750 million, taxpayer money, do you think it's okay with the Biden administration that that goes to federal prisoners?
The IRS is carrying out the law, and this is a law that Congress passed.
Well, it's very interesting, and I have the yays and nays here from a March 6th of 2021. It was a Cassidy Amendment, 1162 on the Senate side. And we actually offered it was an amendment over there to block federal money, taxpayer dollars, from going to prisoners. But every single Senate Democrat last year blocked that amendment to the American Rescue Plan that would have prevented these payments to prisoners. So we see that the Biden administration didn't support that. But does the Biden administration support sending taxpayer money to federal prisoners like the Boston bomber in particular?
Look, as I said, Treasury is charged with carrying out programs that Congress passes, and that's what we're doing. And I don't have an opinion to share with you beyond
I understand
saying
that, but it seems-
we're implementing a law that Congress passed.
I mean, I'm just as confounded as it seems you are at this, because with the majority in the Senate side, they had the authority to stop it, but did not. Or if they didn't have the authority, why did they support the amendment that would have given you the authority to send that? The Biden administration, it just seems, was very irresponsible with this, because they could have prevented this, and yet they did not. So I just want to be very clear with you, Madam Secretary. I do not think that federal prisoners should be getting stimulus checks, period. Every taxpayer dollar is sacred and should be treated that way. So I strongly urge your department to do better when it comes to safeguarding taxpayer dollars. I yield back.
The gentlewoman from Iowa, Mrs. Axney, who is also the Vice Chair of the Subcommittee on Housing, Community Development, and Insurance, is now recognized for 5 minutes.
Thank you, Chairwoman, and thank you, Secretary Yellen, for being here. It's good to see you today. And I want to start out by thanking you so much for helping the great state of Iowa get the funds that we needed transferred from the state over to Polk County to keep a roof over people's head, and how quickly the Treasury Department responded to the request from me and the state to make that happen. It's made a big difference, and I really appreciate it. Again, I'd also like to thank you as well for yesterday's event where the president signed the executive order, and for helping us address that family glitch so that a couple 100,000 more Americans can get health care coverage, and we can lower the cost for others. In states like Iowa, that means a world of difference. So thank you so much for all you do.
Thank you for that. We were glad to be able to address that.
Wonderful. Well, here's the deal. I know a lot of people, and you're hearing it today, are very interested in how the sanctions are working against Russia. I've heard from multiple folks and in briefings, et cetera, that the sanctions seem to be working well. But as that is basically one of our key tools that we're using right now in this issue, I'd like to hear more from you if you think that those sanctions are working in the way they should, and if they're strengthening what we have in place, and if there's any suggestions that you also have.
So I do believe the sanctions are having a devastating effect on Russia. Russia's become almost completely isolated from the international financial system. It's finding it extremely, American and foreign firms are leaving Russia. It's losing access to goods that Russians are accustomed to buying and being deprived of. The Central Bank of Russia had amassed a war chest of reserves of over $600 billion that they counted on to be able to deal with the impacts of sanctions on their economy and to help financial institutions and firms that were badly affected. And our sanctions on the central bank, jointly with our partners, have deprived them of access to certainly over half of that, and another 30 or 35% is tied up in gold and other forms of wealth that are not highly liquid. So we have really deprived them of access to a war chest that they were counting on. We have imposed restrictions on exports of a wide range of equipment that's including semiconductors that are critical to Russia's ability to continue to build defense and high technology sectors. We have sanctioned hundreds of Russian oligarchs and members of the Russian government. We've sanctioned firms in the defense sector, in the aerospace sector, and we continue to work with our allies to put in place additional sanctions as Putin ramps up his horrific crimes in the Ukraine. Just this morning, we announced that we're putting in place full blocking sanctions against Russia's largest bank that has over a third of the assets of the Russian banking system. We're prohibiting Americans from investing in Russia and further sanctioning elites. And this is, I believe, going to have a devastating effect on the economy and already is doing so. So, you know, every week we have put in place new sanctions, working as closely to coordinate with our partners. We have a huge coalition, countries that have rarely, if ever, imposed sanctions, including Switzerland and Singapore, have joined with our coalition, and I do believe that they're working.
Thank you, Secretary Yellen. That was a great overview. I did want to talk about supply chain because of the lockdown in China. I might ask you right over to your office. I'm running out of time, but I appreciate all the work you're doing and the update on the sanctions.
Thank you very much. The gentleman from Tennessee, Mr. Kustoff, is now recognized for 5 minutes.
Thank you, Madam Chair. Thank you for calling today's hearing, and thank you, Secretary Yellen, for being here today. One thing I hear from constituents at home, and I think every other member of Congress hears from their constituents, is everything is expensive. It's just expensive to live today. And there are a lot of factors for inflation. I get that. I do want to ask you, going back to the American Rescue Plan, before we voted on it, Larry Summers, one of your predecessors under Clinton, talked about the package, and he said, I'm quoting, he said, I think this is the least responsible macroeconomic policy that we've had in the last 40 years. He's right, isn't he, Madam Secretary?
Well, he's not right, and I'm sorry I have to differ with his assessment. You have an American economy that is enjoying the strongest job market that we have had in decades. Americans feel confident of their ability to get jobs and to move to better jobs. To think that a year, 2 years after a pandemic struck our country and unemployment was in the double digits, rather than waiting for a decade as we had to after the financial crisis to recover the jobs that we lost. This country is enjoying a 3.6% unemployment rate and has seen the creation of over 500,000 jobs a month in recent months. Americans' financial conditions overall are very strong. If you ask the largest banks in the country that keep track of checking account balances of their customers at all levels of income and wealth.
Let me reclaim my time, Madam Secretary. To put you on the record, you're saying that people feel good about the economy today. The American people feel good about the economy.
Well, they're concerned about inflation, and that's entirely understandable. And I'm concerned about it.
Because they're seeing the highest inflation that they've seen in 40 years, correct?
Yes, it is. And
let me ask you about this. Yesterday, San Francisco Fed President Mary Daly was speaking. She was talking about inflation at a 40-year high. She said about that that's as harmful as not having a job. She's right about that, isn't she?
Well, of course, it erodes the ability of households to purchase a wide array of goods and services. So yes, it is. But remember that especially for the lowest income Americans, wage increases have been more rapid than inflation. And for pensioners, Social Security
reclaiming my time, the wages are not keeping up with everyday goods and services, correct?
For low-income Americans, on average, that is not true. For low-income Americans, their wage gains have exceeded that.
How about for middle-class Americans? Are wage gains exceeding the price increases, or are price increases exceeding wage gains for middle-class Americans?
Well, over the last year, the price increases have exceeded the wage gains.
Thank you.
For middle.
Let me ask you about sanctions in my remaining time. big priority of Chairwoman Waters has been sanctions against the Russian oligarchs. I think of everybody, and we applaud those efforts. As it relates to President Putin, what degree of confidence do you have that any of these sanctions that we've levied have personally touched him or his assets?
We have levied sanctions against President Putin, and this morning, I believe, we levied sanctions against his daughters. Look, did it deter? Did all the sanctions, including those that we've imposed against him, and the threat that we told him that we would make this very painful and impose sanctions greater than anything any country had ever seen?
Let me ask it another way. Is he feeling the effect of the sanctions? Is President Putin feeling the effects of the sanctions? Do we have any?
Is he what?
Is President Putin feeling the effects of the United States sanctions that have been assessed against him?
I don't know personally if he's feeling them yet, but Russia is certainly feeling the effects of these sanctions, and his defense establishment and other critical sectors of the Russian economy are absolutely feeling the effects of these sanctions, as they find it impossible, for example, to find the parts that they need to keep their automobile factories running and to build their war machine and replenish it.
Thank you, Madam Secretary. I yield back.
The gentlewoman from New York, Mrs. Maloney, who is also the chair of the House Committee on Oversight and Reform, is now recognized for 5 minutes.
Thank you, Chairman Waters, and thank you so much for being here, Secretary Yellen. As you know, I'm very focused on Treasury's implementation of my Corporate Transparency Act, which will require companies to disclose their true beneficial ownership to FinCEN. This was the most important up-to-date anti-money laundering laws in a generation, and I believe this should be a top priority of the Treasury Department. The law gave Treasury 1 year to finalize the rules implementing the bill, and that deadline was over 3 months ago. So far, Treasury has not finalized any part of the rule and has only proposed half of it. This is deeply disappointing, especially because the sanctions on Russian oligarchs have shown the importance of being able to look behind anonymous shell companies to find these bad actors. And as we speak, Russian oligarchs are busy moving their money out of our reach, and in some cases, they're likely moving their money into the U.S. because they know they can hide it anywhere they want anonymously until Treasury finally finishes implementing my bill. This is not about Treasury having insufficient resources either. I have worked with Chairwoman Waters and my colleagues on the Appropriations Committee to secure an additional $355 million for Treasury and FinCEN, which is more than enough to write the rule. The second half of the rule, which Treasury hasn't even proposed yet, is the most important part because it deals with who has access to the beneficial ownership database and on what terms. So, Secretary Yellen, will you commit to proposing the access rule for the Corporate Transparency Act before the end of the month?
I can't give you a definite promise on timing. These are extremely complex rules. There are relationships between the two parts of the rule, and they have to be coordinated. Treasury has received very extensive comments on the first part of the rule that it has to consider in preparing the second part of the rule. They're not fully separable. So this is tremendously important legislation. I congratulate you and Congress for passing this. It is a critically important effort. It's very complex. We have to get this right. I can't agree to a deadline. I'm not positive when
Well,
we're going to get
I'll
that
tell
out.
you, it is critically important, especially what's happening in the world with Ukraine. And if you can't commit to the end of the month, when will you be proposing the access rule? Can you give us an estimate for when we will be able to see this rule?
Well, certainly this year, within the coming months.
Well, Secretary Yellen, my message to you today is a very simple one. Please speed up the process for the beneficial ownership rulemaking. This is taking far too long, and we need action now, not in a few months, but now. We don't know who's behind buildings in New York and elsewhere, which are just bank accounts. There are no lights in the buildings. People don't live there. They're anonymous shell companies. And law enforcement wants to know, the public wants to know, the Ukrainian people want to know who owns this property, and we can't get to it until the rules have been made, and we are way, way behind, and it is an emergency. Now I'd like to move on to the substance of the rule. There are a number of things Treasury could do in the access rule to make the beneficial ownership database more usable and more effective for the law enforcement and others. For example, making the forms that companies fill out very clear and easy to understand, and having companies submit the information on machine-readable format. Open Ownership, which is an international nonprofit that focuses on beneficial ownership, has a number of additional recommendations for Treasury's database. Secretary Yellen, what is Treasury doing to ensure that the beneficial ownership database is as usable and effective as possible for the users of the database?
It's been a key consideration since the outset, and be glad to give you a briefing on what FinCEN is doing on that front.
Gentlewoman's time has expired. The gentleman from Ohio, Mr. Gonzalez, is now recognized for 5 minutes.
Thank you, Madam Chair, and thank you, Madam Secretary, for being here today. I want to jump right into some China, World Bank, debt trap diplomacy questions, if I could. So when we think about the developing world and how we can help them develop their economies responsibly and sustainably, in many instances, countries in the developing world are choosing between different financing packages. Way too often, they're choosing China and the usurious terms that come along with that. So from a tools standpoint, what do we need either at the IFIs or the DFC to have more competitive offerings for the developing world so that they're choosing our packages over China's? And or are we even at the table when these conversations are taking place?
So I think we need the multilateral development banks to be adequately financed so they have the capacity to offer sufficient financing. There's an enormous need for infrastructure investment throughout the developing world. Countries are starved for the resources, and many don't have access to private capital markets.
So just to interrupt quickly, is your contention that these banks are not funded appropriately, like the World Bank, IMF, they do not have adequate capital to make competitive offerings? Is that what you're suggesting?
Well, in some cases, they are adequately funded. In other cases, there probably is a need for additional resources. We ourselves are in arrears, substantial arrears, in terms of meeting our own commitments and in terms of trying to generate new commitments. For example, we feel very strongly that the IMF's new Resilience and Sustainability Trust can make an important contribution to energy security and to pandemic preparedness, and Congress hasn't given us the authority to lend money to that. If the United States lends, we believe it could catalyze $100 billion from a group of countries.
Got it. And one of the problems I have with, not one of the problems, one of the issues I've been working on since I got here is Chinese influence at the IFIs, in particular the World Bank, where when I've spoken to previous executive directors of both parties, what you hear is often China has essentially bought their influence, or they've more or less bought their votes in various ways, and it makes it very difficult to defeat anything that China wants. And as a response, one of the things that I introduced and got signed into law was the Accountability for World Bank Loans to China Act. This law has various reporting requirements, but also requires the Treasury Department to advocate for a prompt end to World Bank loans to China. China historically blocks that. According to Treasury, there's been low progress on this front. Why has there been low progress, and what should we do? Well, actually, second question, do you personally believe China should graduate from the loan program at the World Bank?
Do I what?
Do you personally believe China should graduate from the loan program?
Absolutely do, and we've advocated it very strongly.
Thank you. Another provision within the enacted legislation is a report to this committee on the indebtedness of countries to China through the Belt and Road, as well as the U.S. effectiveness in promoting debt transparency at IMF and World Bank. In your estimation, how effectively are we countering China's efforts to engage in debt trap diplomacy, and how transparent are they, or how have we done in terms of getting the transparency we need to report to this committee?
You know, transparency is very important. It's a focus of both the IMF and the World Bank, and they've taken steps. We all have to try to increase transparency, especially of China's lending to these countries, and we're not where we need to be on this. You know, China agreed to participate in the common framework for countries with unsustainable debt and hasn't really fully met its obligations there either, and so all of these are frustrations.
Real quickly, 20 seconds left. Just want to get you back on the record on something. You mentioned that at present there's no evidence that the cryptocurrency markets are being used in major ways by the Russians to evade sanctions or launder money related to the Ukraine crisis. Would you just reconfirm that that is what, in fact, what you said?
We've not seen major use of crypto as a way of evading sanctions. We will be on the lookout for it. It's early days, but we have not seen that yet.
Thank you. I yield back.
Thank you. The gentlewoman from Massachusetts, Ms. Presley, who is also the Vice Chair of the Subcommittee on Consumer Protection and Financial Institutions, is now recognized for 5 minutes.
Thank you, Madam Chair. The IMF surcharge policy imposes extra, often hidden fees onto countries with high levels of debt, and it's been widely denounced by development experts and civil society organizations as an unjust burden and a hindrance to our global economic recovery. Secretary Yellen, these fees are coming at the worst possible moment when countries are in the midst of a deadly global pandemic and in desperate need of humanitarian assistance and public health services. Are you worried that the IMF may be undermining the financial welfare and stability of the very places we are trying to support?
I'm supportive of the framework that includes IMF surcharges. They're part of the IMF's risk mitigation framework, and I see them as critical to protecting the IMF's resources and really making sure that they can play a critical role as a global lender of last resort. You know, we're going to rely on the multilateral development banks and the IMF to provide more resources because of the Russian invasion of Ukraine, and we need to make sure that the proper mechanisms are in place, and I think that these surcharges should remain in place.
Well, Secretary Yellen, respectfully, I disagree, and as do 17 other congressional colleagues who sent a letter to you urging you to reconsider in January. And so it's just in 2009, even before the pandemic struck, 64 countries spent more resources servicing foreign debts than they did on healthcare expenditures for their citizens. Okay, moving on. Given that Egypt and Armenia have vaccinated less than 50% of their population, is it fair to say that the money these countries are paying in surcharge fees would be better spent on, say, vaccinating their people or addressing poverty?
Well, clearly there are many countries that require resources, and to address the pandemic, to address downturns in their economy and the adverse impacts of the economy and of the current global situation. And the IMF and the World Bank and other MDBs are providing those resources that are very much needed. So I think this surcharge issue is separate and is a risk mitigation policy that's appropriate.
Well, I think the detrimental impacts of these fees is, and its government's abilities to effectively combat the pandemic is not really up for debate. But since you're not willing to go on record and saying that you would suspend these fees, would you at least be willing to go on record and say that you would review this surcharge policy? At least a review of it, just some consideration given the detrimental impacts?
Well, we can look at it and meet with you to discuss this issue if that would be helpful.
Absolutely. I look forward to that and we'll follow up. Thank you, Madam Secretary. We have to do everything in our power to end the global pandemic, including eliminating surcharges. Thank you. I yield.
Thank you. The gentlelady yields back. I would now like to thank Secretary Yellen for her testimony today. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witness to the chair, which will be forwarded to the witnesses for their response. I ask our witnesses to please respond as promptly as you're able. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. With that, this hearing is adjourned.